In today's video, I'm going over everything you need to know about the Vanguard Information Technology ETF, VGT, listed on the New York Stock Exchange. Hi everyone, and welcome to the series on Exchange Traded Funds, or ETF investing, where I look into specific ETFs and show everything you need to know about the product offering before buying shares of the fund. ETFs are personally my favourite way to passively invest, as it takes the stress and worry out of stock market investing, which can be very volatile with wild price swings holding individual stocks. We will go over the Etf Fact Sheet, including the management fee, the index the ETF tracks, dividend yield, payment frequency, and the fund's performance. I will also go over the top 10 holdings in the fund, as these typically make up the largest portion of the weightings and resulting performance of the ETF overall. It is always crucial to understand what you actually own in these ETFs before buying them. If there's any ETFs you are interested in and would like me to make a video on, write it down in the comment section below. VGT is an ETF provided by Vanguard, who own and operate the fund. Vanguard are the ones who actually own the underlying shares in individual companies. So when we buy shares in the ETF, we buy from Vanguard, who continually issue new shares in an open-end fund, and not the individual companies inside the ETF. Now, VGT aims to track the performance of a benchmark index that measures the investment return of stocks in the US IT sector. It includes stocks of companies that serve the electronics and computer industries, or that manufacture products based on the latest applied science. Stick around to the end of the video, where we'll see how good the performance and returns of VGT have been over time. To find the ETF in your brokerage account, you'll need to type in the ticker code VGT to bring up the options to buy or sell shares in the fund. It pays distributions, which are dividends from the ETF, 4 times a year, with a yield of 0.6%, and has a management expense ratio, or MER, of 0.1% per year. So for every $10,000 invested, it will cost $10 per year in fees. This isn't a bill you have to pay straight away. It is automatically deducted from how much money you have invested in the ETF, so you never really notice anything being paid or taken out of your brokerage account. Now, since this ETF tracks US IT companies, there's no surprise that tech hardware and system software companies make up 21% of the fund each, followed by semiconductor companies at 15%, and data processing and application software making up 13%. If you're enjoying this style of video, feel free to give it a like to let me know and subscribe for more. Now, when purchasing shares in an ETF, I like to have a basic understanding of the top 10 holdings, as these companies will have most of my money allocated to them, and they will end up driving the bulk of the fund's performance. So we'll quickly go over which companies are in the ETF's top holdings and what they do to make money. Intel is an American multinational corporation and technology company headquartered in California. Intel was founded in 1968 by semiconductor pioneers Gordon Moore and Robert Noyce. It is the world's largest semiconductor chip manufacturer by revenue, and is a developer of the x86 series of microprocessors, the processors found in most personal computers. Intel makes money by supplying microprocessors for computer system manufacturers, such as Lenovo, HP, and Dell. Intel also manufactures motherboard chipsets, network interface controllers, integrated circuits, flash memory, and GPUs. Salesforce is an American cloud-based software company headquartered in California. It provides customer relationship management, or CRM services, and also provides a complementary suite of enterprise applications focused on customer service, marketing automation, analytics, and application development. Salesforce's main revenue generation strategy is based on a subscription-based cloud service. Over 92% of Salesforce's revenue comes from 4 categories of cloud CRM services that span from sales to marketing cloud. The remaining revenues are primarily driven by professional services. Cisco is an American multinational technology conglomerate headquartered in California. Cisco Systems was founded in December 1984 by Leonard Bosack and Sandy Lerner, 2 Stanford University computer scientists who had been instrumental in connecting computers at Stanford. The company makes money by manufacturing and selling networking hardware, software, telecommunications equipment, video conferencing, and other high technology services and products around the world, predominantly to other businesses. Visa is an American multinational financial services corporation headquartered in California. It facilitates electronic fund transfers throughout the world, most commonly through its Visa-branded credit cards, debit cards, and prepaid cards. Visa does not issue the cards, extend credit, or set rate and fees for consumers. Instead, Visa makes money by providing financial institutions with Visa-branded payment products that they then use to offer credit, debit, prepaid, and cash access programs for their customers around the globe. PayPal is an American company operating an online payment system in the majority of countries that support online money transfers, and serves as an electronic alternative to traditional paper methods like checks and money orders. The company makes money operating as a payment processor for online vendors, auction sites, and many other commercial users. It charges a fee in exchange for benefits such as one-click transactions and password memory. NVIDIA is an American multinational company based in California. It makes money by designing and selling graphics processing units, or GPUs, for gaming and professional markets, as well as system-on-a-chip units, or SoCs, for the mobile computing and automotive market. In addition to GPU manufacturing, NVIDIA provides parallel processing capabilities to researchers and scientists that allow them to efficiently run high-performance applications. It produces Tegra mobile processors for smartphones and tablets, as well as vehicle navigation and entertainment systems. MasterCard is an American multinational financial services company headquartered in New York. Throughout the world, its primary business model is to process payments between the banks of merchants and the card-issuing banks of the purchasers, who use the MasterCard brand debit, credit, and prepaid cards to make purchases. MasterCard makes money by charging financial institutions that issue the cards a fee based on the total dollar amount of activity. Consumers do not pay MasterCard directly, but to the issuing financial institution. Adobe is an American multinational computer software company headquartered in California. It has historically focused on the creation of multimedia and creativity software products, with a more recent foray into digital marketing software. Adobe is best known for its Adobe Flash software ecosystem, including Photoshop, Acrobat Reader, PDF documents, and Adobe Creative Cloud, and this is where it makes its money by selling these services as a subscription. Microsoft is an American multinational technology company with headquarters in Washington. It makes money by developing, manufacturing, licensing and selling computer software, consumer electronics, personal computers, and related services. Its best-known software products are the Microsoft Windows line of operating systems, the Microsoft Office suite, and the Internet Explorer and Edge web browsers. Its flagship hardware products are the Xbox video game consoles and the Microsoft Surface lineup of touchscreen personal computers. Apple is an American multinational technology company headquartered in California. It makes money by designing, developing, and selling consumer electronics, computer software, and online services. The company's hardware products include the iPhone, iPad, Mac, Apple Watch, Apple TV, AirPods, and the HomePod smart speaker. Apple develops software to run on all their hardware, along with professional applications like Final Cut Pro, Logic Pro, and Xcode. Its online services include the iTunes Store, iOS App Store, Apple Arcade, Apple Music, Apple TV, and iCloud. Now, ETFs are considered to be low-risk investments because they are low-cost and hold a basket of stocks or other securities, increasing diversification. For most individual investors, ETFs represent an ideal type of asset which builds a diversified portfolio. Still, unique risks can arise from holding ETFs, as well as other special considerations paid to taxation depending on the type of ETF. Since inception, VGT has had an average annualized return of 13.8% before tax, and a cumulative return of 881%, which goes to show the power of dividend reinvestment and compound interest, keeping the money invested growing faster over longer periods of time. Now, of course, past performance is no guarantee of future performance, but it's always a good sign of consistently improving business fundamentals, continually driving each individual stock higher within the ETF. I prefer to look at the cumulative returns, as it includes the dividends paid to shareholders, which should always be included as we're getting some value back, plus with the dividends reinvested, this is what provides the compounding effect, exponentially increasing our returns the longer we have our money invested in the fund. This is the sort of approach I take investing for the very long term using ETFs, and one day live off the investment portfolio as passive income through either dividends or selling down small parts of the position, but maintaining the bulk of the capital. If you want to see how these companies make money in detail, watch the playlist shown in the end screen. Let me know in the comments what you think of this ETF and whether you currently own any shares or plan to buy. If you enjoyed the video, leave a like and subscribe to the channel for more personal finance and stock market investing videos. Thank you for watching, and I'll see you in the next one.